Hi, I'm Dennis Dick for premarketinfo.com. Today I'm going to talk to you about the opening pricing action in IBM. Opening only order traders, which are also called OPG traders, placed a lot of buy orders off of the open to offset an opening imbalance in IBM today. The trade got crowded. The high frequency traders sensed this, took the stock down through the 194 handle to shake out all these OPG traders, and then the rally ensued. So let's look at the action. This was what the pre-market would look like in IBM today. You can see the trades are here on the right. This is a chart of the actual trading session so far today. So we're going to be looking at this first bar here and this first few minutes of trade today. Looking here, you can see the stock was actively trading at 8:30, an hour before the open. It was trading up and around 195.89. The stock had closed the previous day at 195.93. So with fair value being approximately flat at this time, the stock was trading approximately where it was relative to fair value. Fair value is just a calculation of where a stock should open relative to the overall market, assuming that there's no news on the stock. So if the overall market is down 0.5%, then a stock with a beta of 1 would typically open down 0.5% as well with no news on the stock. Looking at the pricing action here, though, you can see that the stock started trading actively as we approached 928. At 928 even, a huge opening sell imbalance was published by the NYSE. The NYSE publishes these imbalances every morning at 928. And at this time, it gives an opening indication price as well. The opening indication price was much lower, so you've seen traders quickly hit the 195.06, 195.02, 195.01, and knocking the price down as it was indicated that it was going to open much lower than where it was previously trading up at 195.80 just a little while ago. What happens is, though, you have a lot of OPG traders that see that the stock is going to open down. With the market only being down 4 or 5 points, it looks like it's a pretty good deal to come in and buy IBM at the open. So these traders will offset this huge opening sell imbalance, which was published by the NYSE. And the opening sell imbalance is just there's a lot more sell orders at the opening than there is buy orders. And then they give this opening indication price. And with IBM indicated opening down, a lot of fair value traders would see this as an opportunity to buy the stock and possibly and get long the stock, hoping that the stock will come back up to its fair value. Well, what happens is the stock, as it approaches the 9:30 open, continues to trade down to around 194.52. You can see, I'll show you the opening print here in 1 second. Right here at 9:30.09, the stock opens at 194.31 with 90,000 shares on IBM on the NYSE open. So the stock opened approximately, if we're looking at our chart here, the stock opened right around here. What happened after that was the stock actually spiked to 195 briefly, just in the first second or two. You can see right here, actually at the opening print, the stock spikes up, but then comes right back down. So really, unless you're a high frequency trader, you probably couldn't take advantage of that spike, or unless you had an order sitting out there on the stock. But stock opens 194.31. So you have a lot of OPG traders who are now long at this point in time because the stock has opened. This is where it closed, way up here at 195.93. Stock opens way down here. So you have a lot of OPG traders who are long the stock. So you could say at this time the trade is crowded on the long side. So short-term traders will be looking to sell their long stock. Well, when you have so many short-term traders who are long the stock, there's often a shakeout that will ensue. Now, the stock did trade up in the first few seconds, so a quick OPG trader might have actually gotten out for a 20 or even 30-cent profit, as you can see by these trades going by. But shortly after, if they were holding on, hoping, that the stock was going to move much higher, the stock actually started to sell off. So you can see here the stock is slowly starting off as we just go through the trades which happened earlier. Still trading around where it opened, a little bit above it still. So it gave you a good 30 seconds if you were a quick OPG trader to sneak out. But I think a lot of OPG traders thought that IBM might rally quite a bit farther, assuming or looking where the market was relative to the stock. So they probably held on. And what you can see is actually the stock starts to sell off. Now these OPG traders at this point in time are down money when the stock's trading 194.18. There's stock continues to actually trade in here just a little bit with a kind of a wide spread. So it was tricky. These are all 100 share lots, don't forget. So there's not a lot of trade, not a lot of size going by if you consider that there was just a 95,000 share print off the open. So there's probably a good chunk of that 95,000 is traders that are long off the open. Stock continues to trade, so you have a few trades here in the first minute or two where it's trading flat, but then it does start to sell off, and here's where it starts to sell off. 194.21, 194.20. It's going to try to shake out all of these OPG traders who are holding on, hoping the stock can get back up to 195 where it was trading in the pre-market. So the stock continues to trade, but still continues to trade down. You can see by the bars, you'll see what's going to happen. The stock's actually going to trade under 194. Now, your high-frequency traders, knowing that there's a lot of traders that are caught long, and some high-frequency traders are probably caught long here as well, they're going to try to take the price down to shake out all these OPG traders. So it's actually still bouncing around. It's now trading 194.44, so it's up a few cents if your OPG traders can sneak out. But like I said, 194.50, so 194.60 is actually trading up here a little bit, but eventually it does start to come back down. Going through the trades here, yeah, so here's your big shakeout. So the stock never really traded much more than 20 cents above, so any OPG trader that was going into IBM was probably hoping for a little bit more than that, so they're probably still holding on here. Now you have the vicious shakeout. 194.11, 194.05, 194.13, 194. Now it starts to trade under 194. And what happens is a lot of traders set mental stops, or even physical stops for that matter, at 194. So when the stock starts trading under 194, those stops will be executed and then the traders will sell. So they take it down to 193.88, 193.85, and they continue to take it down. It trades down here all the way down, I believe, as low as 197 or 193.64. So at this time, those OPG traders are under serious water and starting to get actually hurt by this adverse price movement. So as you can see, the stock starts to rally though after that and starts to come up a little bit, giving the traders a second chance. But then there's a second shakeout. I'll just scroll up a little bit farther here. There's a second shakeout, and this is where that second shakeout occurs. So the stock basically comes down, or it rallies a little bit off the hop, comes down, 194, starts trading under it, rallies a bit up, and then starts to shake out and gets this low in here of 193.64. So at this point in time, a lot of OPG traders who haven't been able to hold on, it's 12 minutes into the trade, they're probably saying this trade isn't working and they're getting out. So they're selling, stops are being hit, they're getting out. That's the shakeout, which what I was talking about. So you have this shakeout, these lows of 193.63. So that's right here. So that's the shakeout. Now what happens is the stock starts to rally, as you've got most of these OPG traders have shaken out. So now the stock can rally back up to approaching to up to where its fair value was earlier in the day. So it goes back over 194, and as you can see on the chart, it's going to rally quickly up to 194.20, 194.55, 194.74. So it rallies very, very quickly here in a short period of time, comes back, consolidates a bit, and then continues to rally. So the moral of the story here is a lot of information here I've just given you. Moral of the story is a lot of times off the bat, you'll see the stock open weak, get weaker as it trades and takes out and shakes out anybody who bought it on the open, but then turn around later on 10, 15, 20 minutes after the open and start to rally up. And this is only on stocks with no news. So I'm talking about something just trading off. It opened below where it probably should have. Continued to go lower to shake out those traders who were trying to take advantage of that. The market likes to punish everyone it possibly can. So it takes out and shakes out those traders. And then eventually it starts to rally as that crowded trade is no longer crowded. So actually the path of least resistance becomes higher. So that's the overall pricing action this morning in IBM. And once again, I'm Dennis Dick for premarketinfo.com.